Hello, you're welcome again to a wonderful day today. I want to use this opportunity to say Happy New Month to all my viewers and to everyone that has been part of this channel, helping this channel to grow. For your likes, for your comments, for your shares, I want to appreciate every one of you. And I want to say God bless you and God will prosper you in everything you do in your business. Okay? Every venture that must succeed, you believe with me, has a rule guiding that venture. And once those rules are maintained, you will discover maximum success in such investment. So today we're going to look at the rules that guide forex trading. Now, these are rules that are very important and must be observed carefully if you must be successful in the trading market. Now, let's look at these rules one after the other. I believe it will help us to develop ourselves to becoming professional in the trading market. Okay? Rule number 1. Longevity and mastering is the key to success. When you're coming into the market as a new timer, I want you to remove the mindset of making money in the market. Your main aim should be to develop yourself in the market, understand what the market is all about, and how this market can favor you. Now, doing that will help you to become more successful in the market, which will in turn give you the profit that you are looking for. Rule number 2. Control your emotion. The forex market has a daily turnover of about $2 billion. You will discover that as a trader, you cannot exhaust the capital that is involved on daily basis in the forex market. So when you are in the market, the trader psychology is very, very important to work on. So therefore, you should control your greed, your anxiety, you should control your fears, because there is enough capital in the market that will serve you on a daily basis. Now, one thing I want you to understand, the aim should be to last long in the market. It is better to make this profit small and last long in the market than being blown out trying to get the profit once. Rule number 3, risk management strategy. Always remember that the aim of trading is to last long in the market and make profit. Now, if you must achieve this, you should have a strategy that is working for you. I want you to understand that the forex market is not a place for trial and error. It's not a place you come in to test one or two things to see the one that will work and the one that will not work. No. If you must become successful in the forex market, you should develop a strategy that will work for you. You must also know how to calculate how much that you are willing to lose per trade. Also, you must know how to calculate and set your stop loss properly. Now, if your stop loss must be implemented accurately, you must know how to calculate how many lot size should be used to get the exact pip that you are looking for as your stop loss. Another thing I want you to understand under this risk management strategy is that you must avoid trading the market when the market movement is not clear or certain to your understanding. Now, because when you enter the market, there is high tendency, there is high probability of you losing your money. Rule number 4, avoid overtrading or revenge trade. Always set a trade limit to the trades that will be executed by you in a day. Now, let's assume, for example, you have decided that any day you enter the market, you will not execute more than 3 trades per day. Now, that is a trade limit. Now, stick to your trade limit. Avoid overtrading. Sometimes you will enter a trade and that day is successful, that day is wonderful. There is this enthusiasm to enter more trade. You know, this market is becoming successful today. Let me enter more trade and make more money. Okay. Now, it is very dangerous at that point. That is when you have to control your emotion. Okay. Now, because there is a tendency that the next time you are entering to make more market, there's going to be a trend reversal. And there is a tendency that the profit that you have made over time of you losing those profits. Then what if the trades you executed are on losses and you have exceeded your trade limit? Now, there is this eager to cover up. You know, no, I'm losing. Let me cover up. Let me hit it up. Let me, avoid revenge trading. It is in the nature of every trader to recover a loss. Okay. Now, you have initiated a trade and out of 3 trades, you lost 2 and you gained 1. There is this tendency there is this urge that will tell you trade more to cover the two of the losses to balance it up. It's a normal tendency. Don't worry, nothing is wrong with you. It's a normal tendency. It is there with all traders. Now, that is where self-control and discipline comes in. Now, you have to avoid revenge trading. When you have traded your market in a day, whether it comes out in profit or whether it comes out in losses, once you have hit your set target for your trade execution that day, I would advise you leave the market. Another thing I want you to also be careful of is adding to a losing trade. With this anxiety of, I have entered this market and this market is not going in my favor, and all of a sudden a known pattern appears and wow, this is it here. If I enter this one, I will recover all the losses, and you enter another trade. It is very risky and is very tempting. Now, I advise you, do not add to a losing trade. There's a golden rule that guides the market, and the rule says, keep your losses short and your profit long. If you can observe this rule of keeping your losses short and your profit long, it will help you to last long in the market. Remember, longevity and mastering is the key to being profitable in the forex market. If you are still watching up to this moment, I am super proud of you. Stay tuned and keep watching as I show you the last two rules that have made me profitable in the forex market. Rule number 5, have a trading strategy. You believe with me that you don't go to the battlefield to learn the skills that you will use in the battle. You learn the skills before the battle itself properly. Okay? Now, the same way goes to the forex market. It's not a place for trial and error. It's not a place you go to try out, the things you learned. No. If you must be successful in the market, you must have mastered your strategy. You must have a working strategy, mastered it, and it will help you as you navigate through the market successfully. Now, another thing you must do is you must have a fixed and a stable risk to reward ratio that no matter what the market shows, this is what you are going to use for the market. It's better to enter a trade 3 times to take the profit than to enter it once with a longer risk to reward ratio and lose the market. Okay, now because there is a high tendency that the market might reverse before hitting the take profit. Now, but when you maintain a stable risk to reward ratio, you will discover that your take profit target will be implemented. Another mistake I see traders do is having too many indicators on their chart screen. Now, the success of your trading does not lie solely on the volume of indicators that you have on your chart screen. The truth is that the more the indicators on your chart screen, the more confusing your entering and exit decision becomes. It is better to have a few indicators on your chart screen that you have mastered how to use, okay, than to have plenty indicators, and at the end of the day, your entering and exit decision will be a confusion to you. I normally advise at most 2 indicators for your trading chart. Okay, now 1 price trend indicator and 1 oscillator. Now these 2 indicators will help you to make a better decision in your market trend. If you are still watching up to this moment, I am super proud of you. In this last phase, I will give you the 2 golden rules that have helped me remain successful in the market. Rule number 6, avoid trading with automated machines, trading robots in quotes. Avoid copy trading. Okay, now these 2 things, they are very dangerous to a trader. It makes the trader lazy, also makes the trader to have no knowledge about the market. Now, because the trader is not after developing himself, he has an already source that provides information. He's only just to copy and paste and make the profit. Where the problem lies is this: if there is a disconnection between the robot and the trader, you will discover that the trader stands a higher risk of losing all his capital at once, because he has no knowledge about the market. He doesn't know why the market does the things it does, what makes the market move. Now, entering to trade on his own, you will discover that he will blow his capital faster than is expected. So avoid trading with automated machines or copy trading. It makes you a trader with no idea of the market that you are working in. So our advice, remember that the aim of trading is to develop yourself, to become professional, as you make more profit from the market. The last rule that have kept me successful, which is rule number 7, is never, ever go against the trend. Never go against the trend. It is dangerous. Okay, it has a high probability of you losing your money, not only losing your money, but wiping your capital at a go. The best way to beat the market is to follow the market trend. As you take your profit, you get out of the market. And if you can be doing that on daily basis, following the market trend, taking your own profit and going out of the market, you will discover that you will be a successful trader, profitable one at that matter. If you are still watching till this moment, I am super proud of you. Thank you for your time. But before you go, don't forget to hit the subscription button, the notification bell, like, and share this video. Have a successful trading week ahead. See you in my next video. I'm out.